Hey, good morning. Happy Monday to you all. Your man Omid coming to you for the last market update of the year. I cannot believe how quickly this year has went by like a blur. It's been a pretty wackadoodle year with the market, so it's befitting that it's going to end up here in the way that I'm going to show you in a couple of minutes. But hang in there with me. You're going to be a lot smarter by the time we get finished. So let's just get jump right in. Okay, what's going on with the market? So last week on Monday, when I explained to you what was happening, we had this kind of smattering of the market turning sour. I did tell you that we were overbought, and I thought that traders would start to take profits off the table, which would make it for losses, if you will, in the bond market. Boy, was I right here. As we started Monday, we fumbled down, and then there was a 1, 2, 3 punch that happened. This was basically the CPI, Consumer Price Index, PPI, Producers Price Index coming out in the market, showing inflation is hotter than expected. There are some things that are just not moving, shelter costs being one of them. We got reported on Friday that fruits were up 31%, eggs are up a whopping 55%. It's absolutely crazy. So, again, you see the question mark here because if we are here today and if we break through this floor, there's no catching us until we get to this 100.50, which is approximately about a quarter to 3/8 higher in rates. So let's see how it goes here in the next couple of days with the economic stuff that we are dealing with, and I'll show you that in just 2 seconds. The good news is that the statistics or the trends meter kind of shows us sitting right at 50, so anybody's guess which way this thing's going to go. We started the week last week with rates around 6.72. We're starting this week at 6.95, and jumbo sitting at 7.16. So again, not horrendous, but rates are right there in that 7% mark across the board. And a quick reminder, these are averages of nationwide from every lender that posts to this Mortgage News Daily, and that's how they come up with these numbers. Okay, what's happening this week that's going to move the marketplace, you ask? Well, Tuesday brings us retail sales. Not a big deal, but it'll be interesting to see how much money we spent. My money is going to be on the fact that we spent more because of Christmas holiday season, etc. And the trick here that I see is happening that could bite us really is that there's lots of folks making money on their restricted stock units, their stock options through their company, whether it's Bitcoin owners or whatever it is. Everyone's getting rich on paper, but they're going on debt on credit. And now our credit card debt as a country is right around $1.23 trillion, the highest it's ever been. And so it'll be interesting to see how this holiday season plays itself out. The Federal Reserve concludes their meeting tomorrow, and they're going to announce their conclusion and their rate announcement. 98% of the market now is betting on the fact that they're going to reduce the Fed funds rate by a quarter. I'm going to show you that in a second, what happened the last time they did that, and hopefully it won't be a repeat, but who knows. The issue with reducing the Fed funds rate at this point in time, when inflation is sticky and higher, is that it's basically self-defeatist to their own marching orders, right? They're trying to bring the inflation levels down, make people not spend as much. But now, if they reduce the quarter point Fed funds rate, banks will openly borrow money from one another on an overnight basis to lend that out and to promote spending. So none of that makes sense. This week, again, final Q3 GDP comes out, existing home sales comes out, as well as jobless claims to see how many people have filed for unemployment. That's going to be important. But Friday, PCE, personal consumption expenditure, comes out. This is the Federal Reserve's favorite measure of how they measure the inflationary rate. So we'll see how that goes. Interesting for you to see down here. This is from the 9/17. This is from when they reduced the Fed funds rate last. This is a dot plot that basically shows the 19 members of the Fed who vote anonymously where they think things should be. At that point in time, they wanted to see 2025 with 100 basis points reduction. We'll see here on Wednesday when they release this again what they think, but my bet is that they're not going to all be agreeing on that going forward. As I promised you, I'm going to show you what happens when the Federal Reserve lowers the Fed funds rate. Typically and historically, when they lower it, this is on September 17th, the bond market kind of gets a little wigged out, but then fixes itself. So just as like always, we saw a little wigged out, it fixed itself, but boy, oh boy, did it just mess everything else, right? Completely lost itself. We went down almost 200 basis points from here to here, which increased rates half a point to 5/8 of a point, all the way to 7.25, 7 3/8 down here. We've had some decent pickup after the election. We had some decent pickup in the market after the naming of the new Secretary of Treasury. And because of the fact that he's the adult in the room and he knows what's going on both for bonds and stocks, and everybody liked him. So we saw kind of a jolt there. But again, here's where we saw the negativity from the PPI and the CPI and all the rest of it. Okay, so as always, hang in there with us. If you're not following me on Instagram, you absolutely should. We post quick little 30-second stories daily that keeps you apprised of what's happening in the market and the direction of things. So definitely, if you're not following me on there, please do. It's going to be right in the bottom of this email here for you. Otherwise, Merry Christmas, Happy Holidays. Thank you for all your support this year. We couldn't do any of this stuff without you. Thank you for your positive feedback on these reports. That's what gives us the juice to keep coming up with them every week. Please do subscribe, like, and comment, and forward these things to people you love and care about so that way they can be just as smart as you are. Happy holidays. Catch you soon. Bye-bye.